The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 12th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show kick-started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 126 points. Trade out at 18,211. S&P is up 17. She's trading at 2145. NASDAQ Composite up 51 points. Trade out at 5177. The Russell 2000 is up 5 points. That's trading at 1224. Gold's back $10. Silver's back 43 cents. Light sweet crude is up 31 pennies. Out here leading the charge to the upside, you've got Priceline dollar-wise, I should refer to that. Leading the charge by $19 to the upside. AutoZone is up 16. NetEase is up 13. Regeneron Pharmaceuticals up 11. Amazon is up 9. Google's up 7. So the NDX 100 having a good day out here. The biotechs, IBB, the iShares, that's up about 2%, up about $6. To the downside, Polaris Industries off $5. Taro Pharmaceuticals off 5. Agrium down 3. Thor Industries off a buck. So not a ton of movement to the downside. And how about that, folks? 2 months of sideways action. I take just really 2 days off. Of course, Thursday there wasn't a whole lot of action in the market. Test of resistance. That certainly proved to be major resistance out there. And then, swoosh to the downside. A Nike swoosh to the downside. So now we've got a market, down 400 points today, Dow up 126. So now we've really opened up that range. Now, let's go take a look at what the market is doing as we speak right now. Let's take a look at where these levels that both the bulls and the bears want to know, hey, where is the market headed? So your question would be, can Steve-O help us answer that question? I'm going to do everything that I can. Some of you might be wondering why in God's green earth, I don't know, does that even make sense? No. But why? How is it? How was it? How could it be? How could it be that after a 500-point move, 400-point move to the downside, and the market opens up lower, trades lower last night, right? How could it be that the world wasn't crashing, that we're not moving lower today? Well, most of all of you out there, you all know the answer to that. I didn't even have to be with you on Friday for you to know exactly what the market was going to be doing today. Am I right or am I right? Look at Jay. Look at Jay in the den. He says, yes, the VIX one-day rate of change. All of you are totally on to that, right? I mean, one of the most absolute greatest tools out there with regard to what is the market likely to do the following day when you get such a significant rate of change out there, right? So for those of you that are new to the show, look, should we go ahead and share that with them? I think we should. But how do I do that? Oh, I can do that like this. I'll show you one of the charts included in the newsletter this morning. I would if I had it here. I'll be a son of a gun. Well, I can get it back. Let me just do this. Let me go ahead and open up that. And let me explain to you what it is that we're looking at. You see, there's this phenomena It's a wonderful phenomena out here that when you see a one-day rate of change inside of the VIX index that is greater than 10% out here, if you're short, you better be tightening up that stop out there. And the reason is because you just go back and take a look at this the statistics on your own. And what you're going to find, it's like an 85% chance. Hey, how do you like that? 85% chance that it's going to be sunny. Are you going to go outside and line up around a golf? Yeah, you probably would out there. Well, there's like an 85% chance that you're going to see a bouncer bottom within 24 hours. That is exactly what took place out there inside of the VIX. It works, and when you have those big days, by the way, the chart that's up on the screen right now, S&P 500, that's on the top portion of my screen. Bottom portion of my screen happens to be the VIX index. What do we get there? Rate of change on Friday, 39%. 39.89% out there, one-day rate of change. Folks, you just have to get above 10% in order to get that bouncer bottom going out there. You might say, you got to prove it to me. I'm from Missouri, so show me, Steve. Well, look, just go back and take a look at the last time that the market moved down. This is the S&P 500, June 24th. That was what, Brexit area. You had a one-day rate of change of 49% out there. Was that a bouncer bottom? Yeah, that set up actually the rising price channel that price is trading in. If somebody was going to ask you what's the trend of the market right now, stepping back, taking a deep breath, looking at the daily charts out here, what would you say? You'd have to say the trend is still your friend, and the trend is rising out here. We have not broken any kind of – it doesn't mean that we're not going to, but the trend, which is still our friend, I need to get that one-day rate of change. Now, does that mean that if we're trying to call top, and we'll do that too as well, we're for those that are short or those that want to get short, we're going to go try to identify where it is that this market should then move next, where you'd want to consider taking that position. But you got to learn how to get out of harm's way when you get readings so significant like this, because it's just like, it's anything that you want to do that you just exert so much energy. I mean, just so much energy out there that when you finally achieve that goal, in this case here was a break of a sideways move out there, and then it was just like, boom, the gates opened up, but it used up so much energy that all you had to really do is to create a tight stop. They let the market's going to move down, just trail that along with it, and then be looking for what? Looking for the market to move lower. We'll go ahead and put the ES Mini up on my screen out here. Look for the market to move lower and do it with less relative energy. You know, and I know, just the two of us, okay? We're just going to keep this between just the two of us out there. We know that when the market moves higher or lower, does it with less relative energy, and the cavalry arrives, that is the time when the market will go ahead and make a turn. Then we just have to identify, well, where is it headed? That is exactly, by the way, which took place out here last night, 9:30, all right, 22:30 hours out there. Is that 9:30? No, it's 10:30. I'll get my time zones straight out here. At 10:30, market's moving lower, doing less relative energy. The bulls actually showed up on that very next trading session there at 11 o'clock. We then just simply saw sideways movement, even in light with what was going on in Asia, in Europe when it opened at 3 o'clock in the morning, 3:30. That didn't push the futures contracts lower out here. So now the question is, hey, where is this going to move to? Unfortunately, we don't have any kind of A to B equals CD pattern. We wish we did, because that could be a Gartley sell pattern. There's really not one out here. So we get back from this break. Let's go take a look at some longer term charts, try to figure out where this market might be headed to, because both the bulls and the bears have to be watching this next level of the market. One day rates of change greater than 10%. You got to love it. Steve Rhodes with TFNN. Be right back. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all by price relative strength divergence pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now up 167 points. S&P is up 22. NASDAQ Composite up 61. So you guys are smart. You guys are the most. You guys are super smart out here. It's a wonderful thing. It's a privilege to actually be out here with you. Look at how. Look, somebody writes in and says, "Hey, Steve-O." They actually said Steve. Steve-O, though, is good. Said, okay, so the VIX index, one-day rate of change greater than 10%. Looks like today's going to be less than minus 10%. Does that have any meaning? Right on. That was a Bill. Right on Bill. I mean, my goodness. Well, so let's go take a look at it. It all depends on how the day ends. But here's what Bill is looking at. If we take a look at right now, as we speak right now, cash VIX index, that's what we're taking a look at, down to $143. It's only down minus 8%. But, the market could get moving to the upside out here even further. The VIX could continue. Heck, the VIX can pull back. You might say, where could the VIX pull back to? Excellent question, by the way. And I'll answer your question here, Bill, in a moment. But what's a level to be watching? 1350. You're well away from that. You are at 1611 right now. But easily get down to the 1163 area. Either way, getting down to any of those areas, what you would see is you'd see a one-day rate of change inside the VIX index of minus 10%. Now, it is unusual, but it does happen periodically. And if we take a look at the VIX one-day rate of change, you can see right now, minus 8.34. That's the blue numbering on the very bottom portion of my screen out here. So we know that Friday, let's go ahead and expand this out just a tad here. We know that on Friday we had a one-day rate of change at 39%, 39.89 to be exact. Just as an example out here, let me go back and take it one step further. June 24th was 49.33 out here. The very next day, I only got down to a minus 7.41. But boy, how about that? The day before that, VIX rate of change fell by 21%. Now, when you can get those back to back like that, you got to be careful. As bearish as the charts might be. It doesn't even make sense coming out of my mouth out here, as bearish as they are. We had one bad day so far on Friday. And I could absolutely make the case that there was a top that came in on September 8th out there in the futures market, the equity futures market inside the NQ. But we got to be careful. Let's just, let's just check our emotions at the door and instead just simply go ahead and put the probability on our side with regard to how the market behaves out here. And when you get this going from a plus 10% to a less than minus 10% out here, if that's the correct grammar, you can find that to actually be an initiation point in the market. You don't see it happen often. It happened as we were forming the most recent bottom back in June, Brexit time. Now it's, interest rate time. That's what caused it all. You don't think there's a possibility that a nuclear bomb, and I wasn't here, I was out enjoying myself, actually, which was great. But you don't think that there's a possibility that the combination of a number of things, such as a nuclear bomb by the crazy, guy in Korea, that had anything to do with the market and, and so on and so forth. Look, on a trading session here back in August 24th, what was going on August 24th? Does anybody remember? August 24th out there of 2015. What was that? Was that Ebola? Was that 2014? Sorry, I kind of get my August events mixed up out here. But whatever it was, you had a VIX one-day rate of change at about 45% out here. And then, voila, on the next trading session, it was China. Thank you, JB. It was minus 11.59. Now, did that mark a bottom? Just bottom that eventually got tested. But yeah, you got to be paying attention to this. Now, why do we want to pay attention to this? We want to pay attention to this because this assists us with trying to understand if this is just a counter trend rally. And if we were going to only focus on volume, we would say that that's the case. Can we only focus on volume? Well, you can if you want. Am I going to only focus on volume? No, because it's only one portion of the table. It's only one portion of the trading pyramid that's out here. It is not the only element. It is just one of the elements out here. Volume-wise, we can easily make the case this is a counter trend rally out here. So we want to watch to see where the VIX actually closes, because a negative greater than 10 or less than 10% out here, meaning minus 10% or lower, can really be an initiation to higher prices. And if that is the case, where do I think that the market would head to? Well, in the case of the ES Mini, I would say that the area that I would be watching for is to see what happens when price gets up to 2181.50. Not to be exact, but 2181.50 would be the number. 2143 is where we are trading at as we speak right now. So just watch the VIX index today. Let's watch to see where that closes, because that'll assist us with understanding where the market might be at. So that's one level to watch. Let's take a look at the see if we can find any. We're going to take a look at some resistance levels of the TAS market profile. So what's another level for us to really be watching today that is really important here? This is both bulls and bears, because what we did see take place on Friday, without a doubt, we saw a wide-ranging bar. Markets don't end on wide-ranging bars, right? You know that, of course. Watch for the not the cash, but the ES Mini, because if the ES Mini closes today, we're talking closes today below 2141 and a quarter, then all prices actually done thus far is come up and tested an old level of support that now is a level of resistance. If price closes above 2141 and a quarter, where will price go to? Exactly. It'll go to 2165. So you got a 2165 message on the ES Mini. If you get the VIX index minus greater than negative 10%, you can almost bank on it. 21, I don't want you to bank on it. I want you to use stops whenever you're trading out here. But you should anticipate 2165 would be the target. So the next key level, where we're trading at basically right now inside the ES Mini, is going to be 2141. You close above that, then you're looking at a move, another 20-point move overnight into that level. Maybe it's overnight, maybe it's into the morning as well. But watch that, because right now, this is where the market on it, and we've just switched to the daily charts out here. Hey, we get a lot of meaning on daily charts. Right now, up against a significant resistance level. Watch for that close at the end of the day. The Dow, with regard to the Dow futures, the level to be watching, again, on its weekly basis, that's right out here at 18,221. Intra-session, we've seen a high of 18,260. So we know that price has tested that. Thus far, it's rejected it. Old support can easily and oftentimes does become new resistance. So right now today, the important number to be watching, 18,221. You might say, well, if you close above that, where would the Dow futures trade to? My target would be the 18,402 level. So the number to be watching, 18,221 inside the Dow futures. So if we take a look at the NQ, if it's up to the NQ is saying, sorry to be a party spoiler, Debbie Downer out here, but really it's Stevie Upper, I guess, or I don't know. We got what's not Stevie Up. That doesn't even make any sense out here. But if we take a look at the NQ, it's already back above its weekly bottom of its box out here. It's moved up into that point of control area, about 47, 42, but it's back inside the range. It just left it for just a short period of time out here. It is back inside the range. So the key level to actually be watching inside the NQ. Let's say that during David White's show, our favorite polar bear, the market just sells off. Or during the Tom O'Brien show from 3 to 4, the market just closes horribly. The number to be watching inside the NQ to say, okay, this rumpus is going to continue to the south side is the price point of 46.95.45. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 97 points right now. Question came in. Steve, why is the market pulling back? Let me show you exactly why. If we take a look at the 30-minute charts, right? The 30-minute charts out here. Let me start here. We took a look at the NQ. And I'm using a 30-minute chart because it always gives us really great signals. Here's the NQ. Price moves lower, does with less relative energy, goes ahead, turns around, gets above the price oscillator on change line. That's the red line on my chart out there. So the NQ, the ES, the YM, the Dow, all doing this, making the same pattern this morning out here. Do they always make the same pattern? No, I wish they did. When they do make the same pattern, is that important? Yes, it is. So where's the level we want to watch now? Well, here's what was really going on inside the ES. I'm sure it's the same thing with the NQ. You're going to take a look at this little convergence. See where the red, the green, the black lines come together out here? Really important. What that tells me when I see those lines come together, that tells us that the price oscillator is above zero. So in a second, in a heartbeat, I know, and you do too as well, in watching these charts out here, I know where that price oscillator is. Why? Because a rising price oscillator above zero is just simply one meaning, bullish out here. Falling price oscillator below zero is bearish. Now, it's really important. You can see when price gets above that red line, tells us the price oscillator is rising. But just with regard to the location above the red line or below, it doesn't tell us whether it's above zero or it's below zero. In this case here, just one swoop right there where those where that convergence takes place tells us right away where we're at. That's very helpful to us. Now, as price was moving higher this morning, right specifically into the 12 noon time frame, we got into one of those nice TD countdown levels, TD setup levels out here. Prices moved above it. Let's just, which is I'm going to be covering during the workshop here this coming Wednesday, which you can attend. I'd love you to attend the workshop. It's going to be this Wednesday from 5 to 6. Extraordinary education that you'll get, just like always, and put together this along with the oscillator and change line, along with the Japanese candlestick. So everything that you need to know so that you can unleash the power within you. That's really what it's all about. Now, when we get this convergence here and price continues to move higher as it was, it tells us, it signals us that it's time for price to pause. It's like running a little marathon out there, and it's a big move, right? Huge move in the ES Mini off of the low out here from last night at about, 2107 as it gets up to the 2150 area. I mean, that's a 43-point move out there. That's a pretty big – we didn't have a 43-point move for 6 weeks out here. So you got to admit it could be just a little exhausted, having to fend all that up. But what this really tells us here is that price is going to pull back, and it's going to test that oscillator and change line. Now, it may test it by the oscillator and change line moving higher, which it can continue to do, or it may be with price pulling back, which it continue to do, or it can be both. What we know right now is that price ought to test that oscillator and change line. It's priced at 2129.75. Says 80.94 right there. It only trades in ticks, so we'll call it 2130 as the level out here. The key is, for those of you that are going to be watching this overnight or in the morning, you want to see what is it that the ES Mini is doing. If price comes back and tests it, and what this is, folks, this is a support level. This is a very important support level out here. If price comes back, test it on the NQ, on the Dow futures, all the same. Price comes back and tests it, and then catapults off it. That is a very bullish message. That would be setting up your A to B equals CD to the upside, or could be setting up. I don't want to see into the future, but that is what is likely to occur out here, is a test of that area. And then you want to see what, and yes, you're right. If price slices through it like Kerrygold butter with just a medium warm knife out there, and you get back below it, then you've got a continued move lower. Price oscillator is below zero, nothing more bearish than a falling price oscillator below zero. Now, let's say, and so we know that that's the upside, but well, we've got to take a look at both sides of the trade here. So where else is it that price could head to the upside? I'm going to give you one more level to be watching. This is in the ES Mini. I can give it to you for the S&P 500. In fact, I'll do both. Right now, that number is about 2175. That is a key level of resistance out here, which is basically about where the S&P opened up on Friday. That's the red line that is on the chart out here on my screen. So for the S&P 500, you say, what is that number? I say, oh, by the way, here is the XLV. You want to keep a close eye on the XLV. It is in wave number 7 as we speak right now. It could extend tomorrow with a lower low out here, but it is in wave number 7. That's often where you can find the most significant changes in trend out here. So you want to be paying close attention to that. But with regard to the S&P 500, the number that it is that you're going to be watching for, and any bounce higher, because this would be the ultimate place for those of you that have an absolute bearish outlook, this would be the place that you would want to sell. It would be a gift. And that gift would be 2175.91. You're at 2140. So it's another 35 points higher. Could it happen? Yes, of course it could happen. Is it going to happen? I don't know. What we need to see is we need to see on that 30-minute chart what happens when price converges with that oscillator unchanged line. So hopefully that assists you in your trading and investing. Okay, so let's go take a look at some other things that are going on inside the market out here. Let's go take a look at Goldilocks. We typically get questions on that. I'll anticipate that there are probably some emails right now saying, hey, where is gold headed to? Well, we do have that trend line out here. It's been a while since we've drawn it. Let's go take a look at that trend line. The trend is your friend, or is it our friend out here? I don't even remember anymore. Maybe you know, but let's go see. Here's our trend line coming off the lows back in December 2015. And yeah, so price hasn't really gotten down to the bottom of that trend line, or it's close to the bottom of that trend line. So the trend is still our friend inside of gold. We know that. Let's go take a look at our sideways trends out here. Let's go take a look at the TAS market profiles. Let's go see what they have to say. They have to say that price really ought to get back down and test the bottom of its daily box, which is at 1309. 1309 be the bottom of the daily, would be the bottom of the rising trend line, right in that vicinity. So there's nothing here to suggest anything else but that, and that is with regard to gold out there. If we take a look at light sweet crude, trading out at 46.11, that is up 23 cents out there. Michael Jordan's number, I like number 23 as well. That was my basketball number, although nothing like Michael Jordan. He was good at the swish. I was good at missing the hoop out there, but I still love the game. You got to love the game of basketball. Now, if we take a look at light sweet crude out here, what it did today, early this morning, it found support. This is a key important level for you to be watching, because that's at 44.85. That's a horizontal level of that TAS market profile from its daily basis out here. So what does that say? That says, hey, no reason for light sweet crude to not go ahead and trade up to 47.11. Maybe even the 48.06 level out here. We know it's found support. It has tested. It has rejected the swing point out here from September the 1st, tested at least the top of that, which was $43 even Steven out here. So at this stage, you want to watch the price point of 44.85, because if you see price move below that, what this says is light sweet crude will go ahead and head back down to the August 2nd, August 3rd area in that 46.49 level. But right now, the answer is light sweet crude has rejected a level of support, and it wants to trade higher. Dow's up 107, S&P is up 14. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, I was taking a look at the HIO. Actually, that is the ETF for that's the God, what's the name of it? The Western. What is it? Sorry, multitasking out here. Sometimes not a good thing for me to do. That's the Western High Income Opportunity Fund. I knew I could get it out. And right now, what I can see here, you can see this is the bottom panel of my screen, by the way. That happens to be today. Right now, we're speaking straight out at $5. That looks like a hammer candle to me on that. The reason that we're paying attention to this is because of the correlation that this actually has with regard to the S&P 500 with the stock market in general. You can see the rising price channel out there that it has been in. You can also see that as it's been rising, so too has the market. So it's an excellent, we discussed the VIX index tool out here. People get too caught up into it. I like to just break it down into, with regard to the VIX indexes, give me a tool, give me an indicator, give me something that we can rely upon to give us consistent messages. We have a couple of those out there. And so Friday's action this morning, this afternoon's action in the market is exactly what you would expect, exactly what you would anticipate out here. Well, we've got another tool out here. If we take a look at the HIO, the Western Asset High Income Opportunity Fund out here, because it too, now it's up against the level of support and it's not cracking. You've got a nice little hammer candle out here, at a level of support. So if this is able to hold, that too says that you can see more move to the upside. Inside the S&P 500, and speaking about it, let me go ahead and put this on this other chart. We'll take a look at it because another area to be watching, another level of, it might be the Dow. It was the Dow. I take that back. It could be both, actually. But I'm going to put well, I said the S&P 500. I want to be a man of my word out here. So let's take a look at what the S&P 500 showed us, or showing us out here. Because today's candle, where the session closes at 4 p.m. in the cash indice, is going to be important. Now, the reason that I say that, I'm going to show you the A to B equals CD pattern that is present at the moment. Was formed out here with the shooting star. That was on the trading session of August the 24th out here. That's your A point. Your B point, this little high wave session out here. That's when the market was really getting confused. That, in essence, is the meaning of a high wave session. That was done on September the 2nd. Makes a nice move up into the level out here on the trading session of September September 8th. So we can see that Friday's move inside the S&P 500, nearly it's a 1 to 1.618, A to B equals CD. So big old expansion to the downside. Actually set up a Gartley buy pattern, but you need to have a bullish reversal signal. We don't have that right now. If we were to close up towards the highs thus far today, that would be about the price point of, it's not about 2150. 2150, 70, let's call it 2151, then you'd have a nice little piercing candle. That would suggest that price would also bounce higher. Now, I gave you that number. I'll go ahead and give it to you again out here. Let me just put the oscillator unchanged line. I've got that somewhere in there. There we go. So we've got that. Then we're all set. So the number you're going to be watching, again, 2176 and change out here if we were to see a bullish candle form. Now, what we also have to be aware of is there was a close below a hammer candle. That was the trading session out here from September 1st. So on the bearish side, I can absolutely make the case of a counter trend rally that is going on. If we take a look at volume inside the SPYs, I'm sure that'll more than easily go ahead and make that case out here. But just be careful, not necessarily so fast. We have the same type of pattern, I believe, inside the Dow. Let's go take a look at it. Dow Jones Industrials out here. We'll see the A to B equals CD pattern. I'm sure that A point, though, started much sooner. It was out here in the trading session of August the 15th. That's your A point. Your B point, oh, come on, work with us, would you? The B point out here was the hammer candle. That's what we're going to be watching. That's the hammer candle from September 2nd. And so you can see it was made a 1 to 1.272 expansion. Again, real significant resistance. The ultimate place to sell the market, if we're going to see a market that moves lower for the next 4 weeks. 4 weeks. That would be the level that you would be looking for. Well, you're going to see that the ultimate seller would be 18,456 today. It'd be a little bit different figure tomorrow out here. So, and no reversal signal yet inside of the Dow Jones Industrials. It doesn't really matter until the end of the day. But it is this HIO. I'm just trying to give you a little slight subtle clues. You're watching this on TigerTV. The top chart out here is the S&P 500. So in order to get some real failures, money needs to be fleeing the HIO. That would be the better signal for you, and we just don't have that. With regard to equal-weighted ETFs, there's no signals out here there for us to pay attention to as I take a broad look at this screen in front of me. That is really the only significant signal that we would want to be paying attention to out here. So, okay, so what else do we want to look at? Long-term. Let's go see what's going on here. Let's take a look at levels of support. Well, interestingly enough, if we take a look at the NASDAQ composite, we haven't talked about this really most of the day. Price just simply moved, but we talked about these horizontal trading ranges out here. Horizontal trading ranges, the blue lines that you see going across my screen, that means we're on a daily time frame. So the pullback inside the NASDAQ composite, 51.15, it found support there. It's moved off of that. Says price wants to get up back to that 52.20 area out here. So that's where that move should take us. And he closed below 51.15. You're looking at 50.10 and then 49.05. But right now the message is, hey, support has held nicely. Let's go see what's going on inside the other markets. Let's look at the Dow. Let's go see what it has done daily, weekly. Monthly says that the Dow, well, that's going to be the important level to be watching. 17,783 is where price needs to crack below. The S&P 500 with regard to this, it says that price needs to crack below. Really the same thing. So the weekly chart out here, our horizontal trading range, 21.29. Price has found support. So closing above that for the week, it landed really right there, smack dab right on the number on Friday's closeout here. So it's got to crack and stay below 21.29 in order to bring 1985. That's right, 1985 into the picture out here. So that gives you a little bit of different time frames to look at inside of the indices out here. Don't think it can't be done. Those of you sending me emails telling me that the market was going to crash this morning, you should sign up for my workshop. Absolutely, because I will show you, I promise, I will show you how the market forms these tops and bottoms out here so that you can look. I want to be able to teach you how to fish on your own. It's an expression that probably, is overused out here, but really that's the truth. I mean, that's what each of us here at TFNN do, right? We have all these wonderful tools and systems, and we just simply want you to get acclimated to them because it is so much easier, so much better. It just sets you free versus, and then it kind of keeps things in check as you're listening to us or listening to other financial analysts. This is nothing more than really what do the charts say, right? It's a technical analysis of what do the charts say. So much I'm sure that you hear every day and I hear out here is that now it's all about computers are the ones that are trading. I don't know about you. I'm no computer. You're no computer. We just simply know when price moves lower, does with less relative energy, time to be careful. Or moves higher with less relative energy, time to be careful. It says the euphoria, the party is about to come to an end for the time being out there. Those seventh wave moves, all the stuff that I'll be teaching Wednesday evening, 5 to 6. All the sign-up details on the homepage of TFNN.com. You've got the Dow up 150, S&P is up 21, NASDAQ Composite up 58 points. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, as we head into our last segment here. Dow's up 150, S&P's up 20 points. Question coming in says, where do you see the gold miners going, up or down? what I don't have here is a time frame or anything, so I don't know what this individual is looking for. But if we do take a look at the GDX, he mentioned the gold miners here. Let me at least give you some information on the GDX. I'll give you a couple pieces of information on the GDX that you can focus on. First, with regard to where things are headed to, what you want to be watching right now, you've got a nice little downtrend that is in place inside of the GDX. Could be forming an A to B equals CD to the downside. At the moment, we're seeing a bit of a bounce out here, which would be both inside of gold as well as is gold bouncing. Let me see where's no, gold is off about $5 right now. So the GDX is holding up, relatively well. Green candle just means it's trading right now today above where it opened. It's not a bullish reversal signal. What I would be watching out here is the price level of about 27.50. 27.53 right now today, oscillator and change line. A bounce up to that level, testing as resistance, holding and moving lower would tell you that the GDX would be heading lower out here. The price oscillator, that's the bottom portion of my screen. It is down below zero. So you've got a falling oscillator below zero. The message there is, again, we're looking at a daily chart, and you didn't tell me the time frame you were looking at. The message here is bearish. The only way it gets bullish is if price is able to overtake Stevie's red line again. Right now, that's priced at 27.53. So you'll have to use that area as a place to be watching, observing your trade inside of the GDX. With regard to daily profiles, weekly profiles inside the gold miners out here, prices below all of them. When I say those two time frames out here. So its message as well is one of a continued move lower to the downside. But you'd want to be selling it at the levels that I gave you earlier. That would be the place that you would be looking for. Not now, not right here at this moment. What can we do for the next couple of minutes? Let's look at a couple of individual stocks, just see how they're performing, right? Let's take a look at AutoZone. AZO up $16 out here. Boy, that is a nice move we're seeing today. Let's get the volume on this, see what kind of volume profile we have inside of AutoZone, see if this thing might be making a bottom. Let's turn volume back on. Let me turn on my other chart here. AZO is the ticker symbol, so we can have a couple things working at once. We can see here a brand new daily profile that formed today, and that has a little bit of a bearish bias. What this tells us, though, is that we ought to see AutoZone test the 745.84 level. That happens to be the top of its daily profile. The test should be somewhere between 745.84 and 749.32. If that level holds as a resistance, then AutoZone could continue moving to the downside. But really the number, how about this? Let me see here. The number is actually about 731. 731. No, it can't be 731. It's got to be 739. Yeah, so we'll just call it 740. Because right now all that it's doing, although nicely, very nicely, I'm going to do one more thing out here. Let me test one more thing out here before I pull it up on the screen here for you. Is there? No, that's not what I can see here. Here's what I want to show you. I was just trying to see what kind of wave pattern we might be in out here. And you can see that so far, all prices done inside AutoZone is bounced right back up in that oscillator and change line. And that is that red line. That is an important line of demarcation for whether price is running into resistance or testing support. Right now, what we know, got a nice bullish reversal candle out here, but it's just running right into resistance. But if you close above this 740 mark, you see right now, we're right smack dab into it. You close above 740, then you're going to go at least inside of AutoZone, make a run for that 749 area. And if you get above that, 780 is back on the table for AutoZone. Well, folks, I've got to cruise in my automobile, head on out of here, but no fret. Our favorite polar bear, David White, is up next on the Tom O'Brien Show from 3 to 5. Have a magnificent Monday. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.